Hi, I am Anna. I come from www.ntvforex.com. Markets Outlook. All eyes and ears turn to the Jackson Hole Symposium Analysis. http ntvforex.com News ID BA8D0B824 13:26 AM Jackson Hole Symposium NBSP. While this week's data docket will provide an initial read on Q3 economic activity, the Kansas City Fed's Jackson Hole Symposium will be the critical focus for Fed watchers, particularly with Chair Powell headlining the event with a speech on Thursday morning. NBSP this year's symposium, titled Navigating the Decade Ahead, Implication for Monetary Policy, could provide the perfect platform to outline topics of discussion from the Fed's ongoing policy framework review, hence all eyes and ears being trained on Chair Powell's speech. NBSP. While the policy review results may be released along with Powell's appearance, it's more likely the results will be released at the September FOMC, which should codify the view of the Fed's pivot to a soft average inflation target. With inflation running persistently below target in recent years, this shift will reinforce Powell's dovish message that the Fed is not even thinking about raising rates. But this is not likely to surprise anyone, with investors already convinced central banks would stay with lower for longer on interest rates. The Fed minutes were quite clear on inflation. It's expected to stay low as the pandemic demand shock will outweigh any supply chain disruption in terms of price effects. NBSP Fiscal Showdown. NBSP. While it's been well discussed that the congressional stalemate presents near-term downside risks to the recovery pace in consumer spending, the housing and manufacturing sectors should continue to rebound, albeit at a slower pace after the initial reopening bounce. The latest fiscal showdown comes at a critical juncture in the current economic recovery. On the one hand, consumer spending and employment have recovered more quickly than many had expected. However, a quick and sizable effort on the part of fiscal and monetary policymakers will be a crucial driver of this initial reopening rebound. NBSP Forex. With the market caught short USD and the FOMC minutes signaling that YCC is off the table barring a significant economic downturn, the USD found support. Weaker than expected PMIs in Australia, Japan, and the Eurozone had tempered risk appetite, which looked set to finish the week on the front foot after Pfizer confirmed that its COVID-19 vaccine remains on track for a regulatory review in October. The vaccine is potentially a potent game changer if it allows the global economy to return to business as usual. Euro USD dropped through 1.1800 on disappointing PMI data, which raises questions about whether the bird's wing recovery is broken. And with the US market PMIs for August beating expectations, it will provide some relief in terms of the global recovery, but it also suggests a more balanced growth outlook from the US versus EU differential perspective as we approach September. The EU PMI weakness comes alongside worrying virus case counts, and the fall in momentum is particularly troubling as autumn and winter weather will force social activity indoors with higher infection risks. At this stage of the game, the consensus remains to add to longs at better levels, which suggests the downside is limited. After closing our contrarian long USD pre-FOMC trade on Friday as per our August 19 note, after we surmised that YCC would not be on the table after Powell said the same post-July decision, the viewfinder is blank today, so we need to defer to the shifting economic contours and the Jackson Hole Symposium for the next meaningful trade. NBSP France's central bank governor François Villeroy de Galhau has added a new shape to the lexicon economists are using to describe the economic recovery from the coronavirus birdwing. NBSP Gold. There's not a great deal to say about the gold slide this week. The Fed completely underdelivered on gold market expectations while the stronger dollar merely rubbed salt in the wound. But the real sting came after the FOMC minutes were released and showed that meeting participants were somewhat skeptical about yield curve control. Gold investment remains robust, and that sticky demand between $1,875–1,925 remains alive and well, even more so heading into the weekend as bonds turned bid. Yields shifted slightly lower during the mini stock market correction on Friday. If there's ever something of a known in economics, it's that the Fed funds rate will be low for a very long time. Theta not to mention the Fed has made it exceedingly clear that it will continue its current easy policy well into the recovery. In short, the Fed is not leaving the party anytime soon as the markets further bifurcate the economy into haves and have-nots, which is supportive for gold. NBSP. But for the gold phoenix to rise again, help will be needed for higher inflation break-evens or renewed US dollar pressure. NBSP EU UK politics. Staying with politics, another round of negotiations between the UK and the EU on their future relationship will take place next week, from Tuesday to Friday. Recent remarks have struck a positive tone, with the UK's chief negotiator, David Frost, tweeting that our assessment is that agreement can be reached in September and we will work to achieve this if we can. Meanwhile, the Irish Prime Minister also said that there was a landing zone for a deal. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.